I think there's an argument to be made that a lot of these mid-sized systems are in the best position to adopt different modular and scalable technologies, offering a lower friction for suppliers, targeting faster procurement and deployment cycles.
I am Reese and this is The Future of Water, in which we talk about all the ways which companies, utilities, and people are addressing the challenges and opportunities in water. This is episode 118, and I keep telling myself again and again, it's going to be a great one. That's because today I'm joined by Bluefield Research's senior analyst, Charlie Seuss. Charlie, who I think you've heard from before, has been tackling some of Bluefield's biggest challenges. And in this case, it's our municipal capital expenditure forecast for the U.S. and Canada specifically. The numbers have just been posted to clients. One thing we've done a little bit differently, which Charlie and I will get into, is we've broken out the treatment CapEx forecast, which breaks out everything from treatment systems, electrical and controls, piping, pumps, storage. So that's the treatment side of the equation. We separate that in different analysis, different data set from our pipe analysis. We just did a pipe forecast that's hitting the street, I think, as we speak. And that's a different, focus area. But Charlie and I are going to talk a little bit about both, just to give you and the listeners some context about what we see as far as size of the markets, what are key factors shaping those markets, their growth, but also accounting for things like IIJA, climate, housing starts, as well as regional differences. So keep that in mind when you listen. And I look forward to having Charlie talk a little bit about this. But before we do that, you're going to have to bear with me just a little bit because I got some news that caught my eye this past week. Korean company LG Chem has agreed to sell its water filter business, which was built or really started around its 2014 acquisition of Nano H2O. Apologies. I remember when this deal happened, Bluefield was about a year old at the time, and it acquired Nano H2O to get into the RO business, and it was really exciting. And now they seem to be getting out of it. So they're selling it to private equity firm, Glenwood Private Equity, for about $692 billion, which is not a small sum, particularly in terms of the water business and as far as big deals go. The carve-out includes everything from the assets, the intellectual property, as well as the staff tied to the company's reverse osmosis membrane business, which I think according to the numbers, at least supplied by LG, is that LG makes up about 21% global market share, second only to Japanese firm Toray. So it's not an insignificant player when you look at this segment of the water industry. LG's decision to offload its RO business, once touted as a growth engine, as recently as 2023, when, if I recall, it had invested significant dollars into manufacturing capacity in China. So this does mark what I would call a sharp pivot towards liquidity or portfolio simplification to focus on other areas. I think, I suspect that also the broader macroeconomic environment is playing a role as well. Another reason why I thought this was interesting was that, Glenwood's acquisition of LG's Water Solutions does indicate it's looking for a big splash, and it has done exactly that. The firm seems to be assembling an integrated platform of water and environmental services through I think it's specialty targeted corporate carve-outs, which is a model we've seen in other places in terms of consolidation trends globally. But Glenwood has also developed, it's not their first time talking to LG. They've seemingly developed it. I think, let me step back. Glenwood is, I think, Korea-based as well, and they've developed a close relationship with LG, having acquired its diagnostic business, now renamed Invitros in 2023. So, hey, I know you, friends and family, let's work this out. Sometimes that's what happens. But also, another point to be brought up is that the reverse osmosis business, it's a highly competitive segment. That once someone told me that it felt like the Hunger Games. Top five vendors account for about 80% of global reverse osmosis supply, with tailwinds from things like industrial and municipal water reuse. Desalination is a big area of focus in places like the Middle East. Also, just regulatory water quality standards are driving adoption or utilization of a more advanced treatments such as RO. You could include things like PFAS in that space as well. So this is interesting. Got a new player coming into the market. Private equity at that. There's been a lot of private equity activity at Bluefield. We track M&A in an ongoing business or ongoing process, should I say. Quarter to quarter, we're looking at this. And private equity does play not an insignificant role in what's happening, but that's not any different than the rest of M&A. I think private equity is where the money is these days. And we do see fewer and fewer IPOs. And you could put DuPont's water business. DuPont had pulled back from IPOing its water business, which it had announced last May 2024. And then I think more recently they came out and said, actually, we're going to sit on this for a little while. Whether that's because of market conditions or they just see opportunity and maybe they have a bigger appetite for margins that it's providing. So that being said, that's what caught my news this past week. Really interesting. Be on the lookout for any research, particularly out of our global company strategy, water company strategy service. That covers things such as this. So with that being said, let's get to Charlie and talk a little bit about municipal CapEx in the U.S. All right, so I'm joined here by Charlie Seuss. Charlie, how goes it?
Going pretty well. Finally, I feel like spring is officially here in Chicago, so that's always a good sign.
Wondering if for these podcast episodes, maybe I can use AI to do it. I can go back and have them scan. You could probably track the weather patterns based on the podcast, because I feel like it's a common occurrence that we always talk about the weather at the beginning, which is fine. I do it with Dave McGimsey on the Water Values podcast as well. So, well, look, I mean, let's sort of cut to the chase here. The reason I asked you to jump on with me is because we've been doing a lot of forecasts, not just one, but a couple, and on the municipal side of the equation. So we're looking at, capital expenditures for water plants, treatment, and so on. And then we can talk about this a little bit later. We've been doing some wrapping up our pipe forecasts as well. But let's talk about sort of the, what we would call vertical forecasts or the plant and treatment forecasts you put together, and talk about kind of really the exercise we've gone through, the methodology, but also our approach to the analysis that we've just released. So can you kind of give us a little bit of an idea, elevator pitch, so to speak, about what have we been looking at, how have we done it, and so on?
Yeah, absolutely. So our U.S. municipal treatment infrastructure forecast is ultimately it's kind of grounded in this kind of bottom up market model using capital budgets, asset inventories, and various EPA data across all 50 states. And then that's been segmented across different utility sizes, asset types, and different regions of the US. So in a nutshell, our CapEx projections span 6 different asset types, from treatment plants to pumps and lift stations and storage facilities. As well as 5 different equipment categories. And we've also kind of categorized the spending by project type as well. So looking at new build, upgrades, replacement, and rehabilitation projects, as well as what share has been allocated for engineering and design versus construction versus equipment.
And so, but we've purposefully focused on the plant treatment side of the equation, right? So pipes and the pipe network distribution for drinking water and collection for wastewater, that's a separate piece of the puzzle, right?
Yeah, I think that's an important distinction.
All right. So I mean, people can see this if you can go to our website, and I think the number's probably out there. But the number that we're looking at over the next decade is about 515 billion US dollars for municipal treatment infrastructure. And that's CapEx, just to reiterate that. What's driving it? What's behind all of this?
Yeah, so the kind of annual capex, just to throw a couple numbers at you, annual capex is over this kind of 10-year time period is forecast to grow from about 37 billion in 2025 to over 57 billion in 2035. Um, so we're looking at about a 4.4% CAGR, and this is all driven by, predominantly aging assets, stricter regulatory standards, as well as increasing service demands in a lot of states. About 80% of total spend, or roughly 406 billion, I think, is targeting, or was expected to target upgrades and rehabilitation projects. So we see that as kind of underscoring a lot of utilities, this kind of gradual strategic pivot from new build to more kind of a life cycle extension and risk mitigation approach.
Yeah, I think that's an interesting number, the 80% on upgrades and rehab. I mean, that's the, if you want to call it, the benefits of living in a place or a market that has well established infrastructure, high connectivity rates for water, wastewater. I mean, that's a big part of it. But then again, it says it's an old system in the case of the US. Yeah. So, I mean, you could even go further when we think about developing markets versus developed. Developing, we'd see probably a lot more greenfield development, meaning new asset build out, whereas in the US, once again, a lot of upgrade and rehab. So one of the, I think, key differentiator, or maybe it's bifurcated, these forecasts really between water and wastewater. Is there a big difference between the two, or are we looking at like a 50-50 split?
Yeah, so it is, when we look at kind of total spend across water and wastewater infrastructure is expected to make up about 58% of the total at around, 300 billion, growing at around, I think 4.2% CAGR, which is a little bit slower, I think, than we're seeing in the water side. But, on the wastewater side, this is, again, kind of largely attributable to expanding centralized sewer systems, adopting advanced treatment technologies, as well as mitigating in many cities, kind of combined sewer overflows that are driving growth. And again, one thing I meant to mention in the previous question, I guess, is so much of this is ultimately kind of based in the kind of bottom up data that we are looking at through reviewing municipalities' capital improvement plans and kind of combing through that data to inform our forecasts.
Yeah, I think that's a really important point to bring out is you mentioned using EPA data, but then we have gone utility by utility. We look at about 850 capital improvement plans every year, project by project, and use that to help inform a lot of our assumptions that go into this. So I think thanks for bringing that up. One thing that sort of calls out, or you've called out in the team, has to do with the sort of the size of the utilities where a lot of the investment is going. And maybe I can frame this. I think everybody knows this, but if you're new to the water sector, there are, I don't know if you mentioned this or not, but we're looking at about 75,000 water and wastewater treatment systems or facilities, right? So it's highly fragmented, but to put things, even demonstrate how truly fragmented it is that I think there are about 420 utilities that serve more on the water side, at least, that serve more than, 100,000 people. So a very small number serve the large cities, obviously, and then the rest are really small systems. So one of the things that, now to my real question, is you've called out mid-sized utilities represent a core investment. I don't know, battleground is the right word, or opportunity. Can you help frame that? Well, what's the take that you guys came across in going through the forecasting exercise?
Yeah, absolutely. So mid-sized utilities, which, in this context, we're defining as, those serving populations of 25,000 to 100,000 people, are expected to account for about 28% of the total spend during the forecast period. roughly, 143 or so, $45 billion, which, far exceeds what we've forecast for the largest system serving over 1 million people, which accounts for about $43 billion. I think there's an argument to be made that a lot of these mid-sized systems are in the best position to adopt different modular and scalable technologies, offering a lower friction for suppliers, targeting faster procurement and deployment cycles. Again, a lot of this is fed by what clients are asking for, and segmenting the forecast by kind of different population tiers is kind of one way that we've addressed that.
Yeah, I think it's interesting because we have clients and companies coming to us saying, "Hey, we just want to look at the large utilities," and the large utilities like an LADWP or a DC Water on the wastewater side, they're pretty sophisticated, right? They have in-house capabilities. They know technology or deploy technologies. And then on the other far end of the spectrum, so the much smaller, let's say, municipal utility districts in Texas or other small private systems, they don't have access to financial resources. They're not going to bond markets. They may only have several people working at the utility itself. So do they have the capabilities or the wants to address some, or deploy maybe smarter technologies like digital systems and so forth? But what you're getting at is right in the middle, these mid-sized, medium-sized utilities serving 25 to 100,000 people is kind of a sweet spot, right? They may have access to enough capital that may be sophisticated enough, but yet they're not so large that they're going to do it all themselves, right, internally. So I think that is really interesting. And they have real needs, right? They have enough, their customer bases are large enough that they really, not that all of it doesn't need to be addressed, but they're more likely to address it proactively if possible. So I think that's super interesting. Well, when we look at it, we break the U.S. up. I mean, the forecast, we've looked at it state by state, water, wastewater, state by state, and I think across the categories you already mentioned. But the U.S. South, which is where I'm from, proudly so, shaping up to be what is the hottest and maybe riskiest regional market for all of this. What's your thinking on that?
Yeah, so the Southern U.S., as we've defined it, kind of according to the U.S. Census data, or consistent with that definition, that region of the U.S. is projected to account for about 44% of total municipal capex, again for the treatment segment, through 2035, with Texas and Florida kind of unsurprisingly leading all states at 74 billion and 49 billion respectively. New housing development is certainly a key driver here, but I think this really comes down to the upgrade needs for, what are the country's largest asset bases. Greenfield development, which, often linked to kind of population growth, is forecast to grow actually faster than some of these other project types like upgrade, at 8.1%, at an 8.1% CAGR, but ultimately just accounts for about 4% of total spend on treatment infrastructure. Much of this growth, again, is kind of concentrated in the South, where you have kind of suburban and ex-urban expansion kind of reshaping demand for new treatment plants and system build-outs. I also think it's important to recognize that, much of this region faces growing challenges from climate disasters and water stress to funding uncertainty, which kind of make it both an investment magnet as well as a high-risk zone for utilities and suppliers.
It makes sense, right? When you step back and think about where's population growth happening, then also you include Florida and Texas. Whenever we talk about anything, it feels like, what are the biggest markets? It's going to be Texas, Florida, California, New York. They're the big states. That's where all the people are. But Florida and Texas are growing. But I think your last point is really interesting. When we look at climate data, where are large storm events happening, or even small storm events? Most of the property damage, according to NOAA, is taking place in the South. Like, I think over 40%, if I recall. Like, don't beat me up if I'm wrong, but it's a significant share of the overall market. And it's interesting to sort of see how utilities in the market is starting to address that, like managing stormwater, managing networks that are being overwhelmed by these large storm events. So super interesting though. Well, one question I know that comes up a lot is about Infrastructure Investment Jobs Act, and maybe starting with what's the current status, and maybe we get to is there any impact in our forecast when it comes to IIJA or other federal funding that came out of the last administration?
Yeah, that's a great question, and certainly something that we're hearing, every week, if not more frequent, and having conversations about. But just to kind of paint the picture, as of April of this year, only 6.3 billion or 14% of the 43.6 billion or so in appropriated IIJA SRF funding has been distributed to projects. And around half of these SRF, several words, are concentrated in just 7 states. So there's been, not only kind of a slow rollout of funding, but also, highly uneven and, highly concentrated in just these kind of handful of states. Now, there's been, the recent kind of executive orders freezing unspent federal funds and tariff announcements, adding to a lot of kind of financial uncertainty for utilities as they address capital planning needs. But when we look again, kind of back at the data, which we're tracking on a quarterly basis, if not more frequently, sometimes Q1 did see a pretty significant dip in project activity across all IIJA water programs. It will take kind of a couple more months, I think, for the dust to settle there, but it's clear, even just from the first few years of IIJA, that those states that have been more proactive in actually mobilizing to access funds are really going to be better positioned in the short term as these projects continue to kind of break ground.
Yeah, and I've brought this up before. I think, while there was a freezing of federal funds, I think we're still pretty confident that the funds will ultimately make it to the states. There's obviously back and forth. I think they've held up. I think the other part of you've mentioned these concentration among 7 states that are sort of out front in capturing their respective dollars that they can get. One part of that is also on the states themselves. Every state is a little bit different. Some are better organized. Some are, more proactive in capturing these dollars. So from not just IIJA, but just SRF as a whole. And so every state's a little bit different. I think the other thing to point out, and that is when it comes to, does it have any impact on our forecast? So really it has pretty limited impact if I'm reading this correctly. And that is, there are a couple of reasons, but I think if you sort of kind of do the math, we're looking at IIJA specifically. If we're looking at $55 billion in new funding, and you spread that across 5 years, right? So that spreads it out across each year. But then of those dollars, 25 billion are going to lead and PFAS, right? And that is complicated further by part of that spend is for inventorying the problem, whether it be for where are the lead problems, where, LSL or lead service line issues. But on the PFAS side, how much PFAS do you have? So a lot of dollars are going towards that as well. So that has to happen. So when you start chipping away at it mathematically, the ultimate dollars are not, huge in their impact, at least definitely in our forecast. But I think if anything, if you're talking about a 4% compound annual growth rate in our forecast, I would also argue, though, that there are tailwinds that have been provided by the federal government's discussion or focus on infrastructure, whether you agree with it or not. The bottom line is people are talking about it. They recognize the value of infrastructure. And also, I mentioned that $55 billion going to the water sector. But in our initial analysis of the federal funds during the Biden administration, even when you're building roads, you still need culverts, you still need pipes, you still need catchment basins. You need a number of pieces that also benefit water equipment or hardware vendors as well.
Absolutely. Yeah. And again, I think I would highlight that, even once these awards make it to the state level, it's a very slow, there are a number of steps in the process for SRF programs to actually get these funds to the project level. So I think we, wouldn't expect the kind of full amount to be, really reach utilities until, the end of the decade.
Yeah, I think no, I think that's a really good point as well. As I was talking about process, and every state's a little bit different. In fact, we've seen historically some states don't even use their full allotment of state revolving fund dollars, right? Which, while that sounds crazy, that seems to be the case. So, all right, well, let's change gears a little bit. And hopefully, I'm not ambushing you here, but we've talked a lot about treatment. That's this forecast we released, I think it was last week, released the data and a report to our clients, and I guess to anybody who's interested. But the other thing that we've been working on in parallel uh, to treatment is pipe networks, like specifically pipes. We've worked with a number of pipe companies. They've been asking about the size of the market, what's happening there. And so we've sort of built that out. And actually, I mean, as of today or tomorrow, we need to finalize a couple little details as far as the data and the numbers go. But, you know, the forecast for the pipes, can you give us a little bit of a sneak peek about what we've been doing when it comes to the pipe network?
Yeah, absolutely. So, separate from our treatment forecast, we have been updating our pipe equipment forecast for both the US and Canada. And this is covering the, roughly 4 million plus miles of water distribution and wastewater collection pipes across the two countries. Our forecast is broken out by material type. So we look at ductile iron and steel and concrete, PVC, HEP, FRP, and others, while also accounting for different pipe diameters from smaller diameter pipe, 3 8-inch pipes to kind of larger diameter projects over 48 inches and above. Our model also accounts for different state level trends in new housing growth. That's really kind of core to the forecast, while also looking at kind of projected spend for pipe rehabilitation and replacement projects as well.
Yeah, it's a really interesting one because I think, when we look at it, it's where's it happening geographically, like you pointed out, we do it state by state. We also take into account things like urban versus rural. We look at material prices. I mean, I think that's one of the things that has come out of this. A big part of the discussions that we've had internally is what's been the impact of inflation on pipe materials and what's the impact on the overall size of the market. So, I mean, maybe in brief, and I don't want to get ahead of ourselves, or as I would say, put the cart ahead of the horse. But what is the size of the market as a whole, just for comparison to what we're looking at for treatment?
Yeah, absolutely. So, again, just accounting for pipe equipment spend across the US and Canada, we're looking at an overall market size of $116 billion for pipe capex from 2025 through 2035. This is largely shaped by, shifting material preferences, inflation, as we've seen, higher costs for certain materials in recent years. And then, as you can imagine, the, new build and warehousing development is happening, particularly the Sun Belt. That's really driving a lot of the spend, as well as, to a lesser extent, rehab and repair projects in municipalities where, assets are a bit older. And our report will kind of break down a lot of that from, age of existing assets by geographies, to kind of where we see the new build and rehab projects and repair, kind of at the state level driving growth.
Yeah, and I think, overall, what I like about the two forecasts, the treatment, also known as vertical, if that's confusing to people, and then on the pipe side, we call it the linear, at least have internally. What I do like about it is they basically represent the foundation of a number of other forecasts, everything from trenchless, but then also what about how many valves, how many hydrants, and so on and so forth that we'll do separately. But in this case, we just really wanted to nail down the pipe market for a number of clients. That's what they've been looking for, and then the rest will come in due time. So I think they're really interesting, really valuable. There has obviously been a lot of change and a lot of questions about where's the market heading, whether it be because of what's happening in Washington, whether it be because of the microeconomic climate, including things like inflation, material prices. I mean, that obviously, and then I think you raised a good point. It's like back to your point about geographic growth, where the house is being built, because with every house that's built, there's got to be some pipe. If they're going to be connected, I think that's probably a good assumption to be made, that they're going to require some hookup for water and possibly wastewater, depending on where they are. So, all right, Charlie. Well, so lot to unpack. I think you and the team have done an incredible job. I don't think anybody will truly understand the depth and detail that's gone into these forecasts, just from a basic data management and assumption exercise. It's really incredible. So I would say shout out, obviously, to you, because you've played a leading role on this, but Akshay Deshmukh as well, Megan Bondar's played a role, and others just in discussion. Greg Goodwin has also provided some insights along the way. So really, really helpful. Is there anything, before I let you go, what else is either on the agenda, or what else has caught your eye when it comes to the water sector? Whether it be fun or dreadful, I'll leave it up to you.
Yeah, no, I mean, I think, again, we've been largely focused on kind of the CapEx side of things in recent months. And, we've got some, interesting research, I think, in the queue around the kind of operational sides of things, both in terms of kind of forecasting OpEx as well as looking at different utility strategies to manage whether it's rising costs for energy and chemicals or workforce challenges, that kind of thing. So a lot of really interesting things happening, I think, even just within the kind of U.S. municipal space. Definitely things to look out for this spring.
Yeah, I think that's a good point. I know everybody be looking forward to that. I think the OpEx side of the equation is really dynamic, right? When you talk about exactly those things, chemicals, workforce, energy, it seems to be that there's disruption across the board. And so what does that mean, whether it be near term or long term? So I think that'll be really valuable in updating our OpEx forecast, but also providing additional sort of up-to-date color on what's happening. So, all right, Charlie. So with that, I'm going to set you free to enjoy spring as we started the conversation. You're in Chicago. I'm in Boston. If Chicago today is anything like it is here in Boston, you're a lucky guy, because it's beautiful here now. So if you can get out, take a walk and enjoy it while you can, because it'll be winter before you know it.
Appreciate it. Thanks a lot, Reese.
All right. So that's it for today's breakdown of municipal water with Charlie Seuss. So super helpful. I think we could probably go on and on about it. But if you want to learn more about our forecast, what we've been doing, you can, head over to bluefieldresearch.com and dig around. You can always reach out to us at waterexperts@bluefieldresearch.com, which is where we are, and we respond to every email. We don't use bots. We don't use any outsourced resources. We see every email that comes in, every contact form, and someone will get back to you with an answer one way or another. I'm not going to lie, we like to have discussions to figure out exactly what you're looking for. But yeah, we want to hear from you. And thanks for being part of the journey and what's turning out to be an interesting, to say the least, 2025. And it'll be interesting to see how the next 3 quarters unfold, not only just in the markets as a whole, but also in our research. We got a lot of great research coming out. As you can imagine, there's increasing focus on things like the impact of tariffs. Ethan Edwards' colleague just put out a research note on the impact of recessions, past and potentially current, on about 15 industrial verticals on what that might mean. We've got metering forecasts coming out for the U.S. We've got a Europe industrial forecast coming out. And then we're doing some pump company analysis right now, among other things. Also investor-owned utility market share. So just throwing it all at you, kitchen sink. But be on the lookout if you have questions about any of those or anything else when it comes to water and how to advance your water strategy. Let us know. Before we sign off, if you're in Boston, Barcelona, New York, Chicago, San Francisco, Paris, let Bluefield Research know, www.bluefieldresearch.com. And we'd enjoy the opportunity for a meeting. We want to meet with you. That's where the best insights not only start, but where they hopefully end, that we can share in person what we're thinking. Send us the notes to that same email address at Water Experts with any topic ideas you'd like us to discuss on the Future Water Podcast. We're doing this for you, as I always say. And lastly, tell a friend about it. I like people. I want to share things. I think you should too. But don't let me make you do something you don't want to do. But I'm not going to lie, it does help us. This podcast and these water industry insights have been brought to you by the one and only Bluefield Research. To learn more about us, visit us at that same place, bluefieldresearch.com. Until we talk again, be well, be safe, and take care.